My name's Steve Spangenberg, and what I am known for is I'm a home-based business expert in taxation and marketing. And just a real quick bio about me, because this call is not about me, it's about you, and it's about saving money on your taxes and at the same time building your business. And you're going to see on this call that if you want these tax deductions, you have to do business activity, and that's going to automatically build your business. So before I tell you a little bit more, can everybody tell me that yes, they can hear me good? I'm talking at the right speed. Is everybody good? Okay, cool. Because I do tend to get excited because this is very exciting, because at the end of the day, it's not how much money you make, it's how much money you keep. And if you're going to do a business, if you're going to go out there night after night and do shows and call people on the phone and recruit, sponsor, whatever you want to call it, if you end up giving over 50% of your money to the government, well, it's just not worth it. So once again, I'm a home-based business tax expert and marketing expert. And what I've done for the last 35 plus years is help people save money on their taxes. I started doing taxes when I was 14. My first paying client was when I was 16. It was my mom's Avon lady. And I learned really, really quickly that the only way that you can permanently lower your taxes is by a home-based business. Now, I've challenged people. I've spoken all over the world. That's how I met my wife. I spoke in Panama, and she was there. So that's another seminar. But I've spoken all over the world, and I've challenged every audience, if they can come up with a way that a person can lower their taxes permanently every year. That means that it's not a deferred tax, it's not pushing taxes off. This is, you lower it permanently every single year. Please tell me, because I'll be interested in hearing about that method. Otherwise, we'll just listen to me tonight. And I'm excited because, the backbone of America is small business and network marketing, direct sales, whatever you want to call it. I've been involved with personally. I retired from that. I built an organization of over 500 people in 1 year, and I know that it works because I got checks for the next 6 years, residual income. So I know this works, and I know that over 10,000 of my clients can't be wrong. And every year I see their tax returns. And I notice one thing is, and that's why I'm on a mission, and you'll get a little bit more of my mission later on tonight, is I'm on a mission to help people also make a whole lot of money, okay? Because if you don't make any money, there's really no reason to save money on taxes, because you're not bringing any money in. So we got to get people making money so they can get the best tax result and get more money in their pocket. So with that being said, we're just going to move on. Why a home-based business? And that's really, really simple, because in America there's two tax systems. The one tax system is for a person who has a business, and the other tax system is for a person who does not have a business. And the person who doesn't have a business is just an employee. They go to work, they pay their federal tax, Social Security tax, and all the other good old taxes, and they have no deductions. So their tax returns, I can do a tax return for somebody like that in about 5 minutes, because really at the end of the day they have nothing. And with the advent of the standard deduction going up every year, even owning a house with a mortgage interest deduction or real estate taxes and all that, even all that is going by the wayside as a tax savings, because they keep raising the standard deduction. So I remember distinctly in my office one year, a client came in and I did their tax return, and they said, "That refund is bogus, man. What are you talking about?" And I said, "What do you mean?" They said, "When we bought our house, our real estate agent told us that we'd get a refund of at least $3,000. And I said, what? And they said, yeah. They said, because you paid interest on this house, you're going to get at least a $3,000 refund. And I'm thinking, please, real estate people, do your job. Tax people can do their job, and we'll all get along. And here, all this realtor did was take old information, pass it on to somebody to basically dupe them into buying a house, thinking they're going to get this big refund, and it didn't happen. So just be careful who you take your advice from. If you want tax advice, stay with a tax person. You want investment advice? I don't do investments. That's a whole other ball game. So the point is, if you don't have a business, you're locking yourself away from all these deductions that are available to business owners. That's why the Warren Buffetts, the Bill Gates, all the people with businesses, even Apple, Apple paid zero taxes in America. Why? Because they have taken advantage of the tax breaks available to businesses. I just saw an ad on the television today in New York City. You can go there right now in New York City and open a business and pay no taxes for 10 years. For 10 years, you can pay no taxes on that business. You can't go there as an employee and say, we're not going to charge you tax. No, you're going to pay taxes. All the little worker bees are going to pay taxes. Okay? So those are the two tax systems, and that's why we have home-based business. And somebody on the call, if you want to just kind of like, if you're near a TV or something, or there's getting some feedback there. Okay, cool. Okay, now all these tax deductions, they come at a cost. That means that you just don't rock up to the IRS and say, hey, I'm in the business, therefore give me all my deductions. There's three things. You want to write these three things down. If you have a notepad, please write these three things down. Number one, there's three things for you to be compliant with the IRS. Number one is that you have to have an intent to profit. Now notice I didn't say that you have to have a profit. You have to have an intent. Now I'm sure everybody on this phone call, when they signed up in their Pampered Chef business, they told their sponsor, they said, if Sherry was your sponsor, you said, oh Sherry, I plan to lose money. I plan to have a whole house full of kitchenwares and all these good things. I have, a big inventory. I'm just going to keep losing money. I'm sure none of you said that. However, absent of a business plan, you have no intent as far as the IRS is concerned. So what is required by the IRS is a written business plan. That written business plan answers these 5 questions: who, what, when, where, why, and the 6th one, how. Okay? I had to count those on my finger. So those are the questions that you want to have answered by your business plan, and that's going to give you the roadmap to your business. And the people, it's been proven over and over and over again that only 3% of the people in America actually make profit and get rich. And those people are the people with a written business plan. Now, don't answer this question. Just answer it in your mind. How many of you on this phone call have a written business plan? Okay? Most people I talk to, they say, oh yeah, Steve, I have a plan. It's in my head. And I say, well, that's just a fantasy, because what happens is we romance our business. We dream of having a big show where we sponsor 10 people and all of a sudden we have a lot of residual income coming in. If you can put that down on paper, then it will become a reality for you. I guarantee if you put that down on paper and look at it every day and monitor it and track it, it will become a reality for you. The second thing that you have to do for the IRS is have sufficient activity to make a profit. Now, once again, I didn't say that you have to make a profit. You have to have sufficient activity. So if you're only doing one show a month, that's not sufficient activity to be in business. Okay? Now I remember back in the day, I started my direct sales in Amway, and I'm not ashamed to say that. I cut my teeth on Amway, and I'll tell you, I worked that business every single day. I drove here, drove there, had meetings, did all this thing. I made $6. Okay? Now, even with that, I didn't get in trouble with the IRS, and my best friend at the time, he was in Amway with me, and he made about $50 that year in Amway, and he got audited by the IRS. And they called him in. They said that, you drove, almost 7,000 miles, and you only made $100. They said, prove that you drove all those miles. So I told him, I said, John, go in and give him your mileage log, and just be quiet. Don't say a word. Just go and give him your mileage log. So that's what he did. He went in, they looked at it, they added it up, they gave it back to him. They said, that's all we need. Go home. And this is, I have over 35 years of experience in all these things, and I know exactly what to do. So if a person comes to me and says, Steve, what do I need to do? If you're going to take a mileage deduction, you sure better have a log. If you want to be in business, your evidence to your activity is going to be your date book. Now you have to write down, do I have a date book? And are there things in my date book saying, yeah, this is when I have a show, this is when I have a show, this is when I make phone calls. You write down everything that you do for your business in your date book. That's your evidence that you can show to the IRS and say, look, here's all the things I'm doing for my business. Here's my written business plan. I know I'm showing a loss, but hey, I'm out there. I have an intent to profit. Now, the third thing that you want to do is you want to keep good records. Now, I must say, I still have somebody that comes to me with a shoebox, but it's an organized shoebox. So, you want to have some kind of system so that if the IRS looked at your tax return, they could look at a number on your tax return, go back to a system, either a ledger or something that shows that number, and then from that ledger they want to go back to your receipts or your bank statements so that they can see where that number comes from. Okay? And I'm telling you, if you have a written business plan, if you have sufficient activity, that means you're going to be doing something. That means you look at your date book. I tell my clients, your date book will mirror your checkbook. If your checkbook is empty, your date book is empty. If your date book is full, your checkbook will become full. Okay? Then you want to keep good records. If you do those three things, you're going to have no problem with the IRS, and your business will thrive. I have many clients, even some clients in Australia that I work with for marketing. I give them a marketing plan, and guess what? If they don't execute the plan, if they don't go out and do it, nothing happens. It doesn't get done. I have just about 10,000 followers on Twitter, and I gave 13 people the exact same strategy I used to get followers on Twitter so that I could make money on Twitter. And guess what? All 13 of them didn't do the strategy, and they're still struggling with less than 50 followers. Okay? My wife did the strategy, and she has over 1,000 followers in 5 months. So it all comes down to executing what you do. So let me just take a break here, and if everybody's just yell out, yes, everything is going okay. You can hear me good?
Yes, we can hear you.
Okay, cool. Awesome. Okay. Now, those are the requirements from the IRS. That's what you have to do to be looked at on as a legitimate business. And I can tell you for sure that even though ducks don't line up in a row, you got to get your ducks in a row. Okay, if you have any holes in those three things, I recommend that you get them plugged as soon as you can, because you can write off a loss as long as you want. You know, a lot of accountants and CPAs, they'll say, oh no, you can only write off a loss 3 out of 5 years and all this other baloney. That's baloney. You can write off a loss as long as you want if you do those 3 things. And I guarantee you this, if you do those 3 things consistently and persistently, you're not going to have losses. Then we'll take you to the next tier in saving taxes. So let's move on to my theory of taxes. Now, what you're going to hear from me is a whole lot different than maybe what you heard from other CPAs or other tax people, because when I went to school, they taught me this, they taught me about taxes and stuff, and it was basically, they didn't know a thing about home-based businesses. They just taught you taxes about individuals, employees, and such. Okay? And I went out and lived and breathed direct sales. I mean, I'm still involved in a direct sales company today. Okay? I still make money. All right? So I'm doing exactly what you're doing. It's not like I'm a guy sitting behind a desk saying, oh yeah, I don't know about that Pampered Chef thing because I'm not even sure what they do. Okay? I know exactly what you do. I can help you on your way. Now, my theory of taxes is this, is that when you cross over, when you signed your agreement to be in business, you crossed over into the business realm. And that means that you get to convert a lot of your personal expenses into business deductions. Now notice, I did not say you get to convert all your personal expenses. I said most of your personal expenses can be converted into business deductions, but they have to be converted properly. Okay? You can't just go and willy-nilly and say, oh yeah, I had a coffee with my friend and I'm just going to write that off. You have to do it properly. And that's really what we're here to talk about tonight. And I'm going to leave you with some things when you get off this call. Even if you don't take advantage of anything that I offer you, you're still going to be able to save hundreds and maybe thousands of dollars on your taxes every year. That's what I want to do on this call, is give you some value so that you know what to do. The first thing, the fun thing that we're going to talk about is the car. All right. Now everybody talks about, yeah, I write off my car, blah, 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 blah. After 35 years, I determined one thing. The only way to write off your vehicle is to take advantage of the IRS's mileage deduction. That means the IRS is going to give you about 50 cents a mile. It changes every year, and usually the IRS doesn't get their act together till the very end. It's about 50 cents a mile. Now, I've proven over 35 years that the mileage method is the best way. Okay, I had 2 Mercedes when I lived in the United States, and I still I didn't have a big deduction. Even though I was driving those cars, my mileage deduction was still better than my actual deduction. So what you want to do is you want to make every mile that you drive, you want to convert that to a business deduction. Now, how do you do that? With intent. So in your business plan, what you do is you write out an intent statement for each one of these expenses. And you say, my intent is whenever I get my vehicle, I want to make it a business expense. That means I'm going to be either delivering product or I'm going to be out prospecting. And a lot of people ask me, when should I prospect? And I tell them one word, always. Always be prospecting. Always have your radar out looking for potential people. That doesn't mean you go to the grocery store and throw up on every person that you see, but you have your radar up so you can ask certain questions to engage person in a conversation that might lead to, well, why don't you come to my show? Or, would it make sense for us to sit down and talk about you making an additional income? Okay, so I'll give you an example. When I was in my last direct sales company, I sold product. I sold retail product. And I made sure everywhere I go I was either delivering product or I was prospecting. And this is the way that I prospected. I would go around at the Sheetses and the convenience stores and the gas stations and the laundromats and all these places that had bulletin boards, and I would put up my card. Okay, I would place all my cards on these bulletin boards. They're still there. I still post it on Facebook to show people, yes, bulletin boards are still there and you can still use them to market. And I would put down those, put my business cards up. I'd take everybody else's down. Okay, because those were all potential leads for me that I could call and say, hey, I was in the area and I got your business card, and I was wondering if we could get together to talk about your tax situation, or if I was recruiting for my business, I would ask them to get together for that. But that was the way that I marketed my business, by putting business cards up. Now that was my primary intent. Even though I was driving to, say, the beach for vacation, I was driving to prospect because I was putting business cards up along the way. And a lot of people, what they do is they get a sign for their car. Now, I'm going to tell you my opinion on the sign on the car. My opinion is that when you have a sign on your car is a rolling advertisement for your business, which entitles you to 100% of your mileage deduction. Okay, so if you want to write off every mile that you drive, put a sign on your car with your contact information on it. Now, I'm going to tell you what the reality is. The reality is that you can deduct about 90% of those miles, because you want to put some, it's a little trick to keep you off the audit radar with the IRS, is that you have to put some personal miles down, because if they see 100% business miles, you get a little red flag go up there. So I tell people, look, you want to write off 90% of what you drive, put a sign on your car. Okay, it's that simple. And guess what? The average person needs, when you look at a billboard on the highway, you have to look at a billboard. The average person looks at that on average 75 times before they take action. So when you have your sign on your car, what you're doing is making impressions on people when you're driving by. Now, I remember when I was driving to an office, I saw the same Mary Kay car every day. Okay, and this starts working on your head. So if you're driving to work, you're driving a certain route all the time, you're going to start making impressions on people's heads. And that's going to lead them to your business. Okay, so that's the easy one, is the car. Now the next one that I like to talk about is the meal. Okay, travel and the meals and entertainment. And this is a double whammy for people. It's like double dipping. You can write off every meal that you have with another person, or every coffee, or if you go drink tea, you get together at Starbucks and have a coffee with somebody. You want to write off 100% of that, and this is how you do it. Okay? You have to have a business intent. And once again, you go back to your business plan and write your business intent. And my business intent is, whenever I sit down with anybody over a meal or over a coffee, my intent is to ask for a referral. Now you want to get that language down very carefully. Okay? My business intent whenever I sit down with anybody over a coffee or over a meal is to ask for a referral. Now I'll tell you what happened to a client of mine who was not a client of mine, and she got audited. And what the cool thing is that she showed me her audit report. That's kind of like inside information. I can get a inside track on how the IRS thinks. And this is how they think. Merely talking about business does not constitute a business deduction. So just listen to that for a second. Merely talking about business does not constitute a business deduction. I hear a lot of people out there, they say, oh, we talk business, we can write it off. No, That's not good enough. That's straight out of the mouth of an IRS auditor. Okay? So you take these things to, to heed here. What you have to do is have a business intent. Now, you might be saying to yourself, well, I have a meal with the same person maybe 3 times a month. And, if I keep asking them to join my business, they're not going to want to have lunch with me. Okay? This is the way you get around that. And this is the way that I've built my business of over 500 people. This is the way I still continue to build business. I have a marketing business in Australia, and I still build my business the same way as I do all my businesses. It's called indirect referrals. So I'll be sitting down with somebody, we'll be having a coffee, all right? And I take out 2 business cards. And somewhere along the line, they're going to ask me, well, how's your business going? I'm saying, business is great, but I could always use more. Would you mind doing me a favor? And they will say, sure, why not? Why wouldn't, do you a favor? I said, look, I know that you're not interested in doing any of this direct sales stuff, and you already have enough money, you're already financially free, but here's 2 cards, one for you to keep, and if you run across anybody that wants to be financially free or wants to make more money in addition to what they're already doing, could you pass that card to that person for me? Now right there, I've asked for a referral. All right? I took the person I'm having the meal with off the hook because I already told them I don't want to talk to them about it. But if they know anybody, if they could pass my information along, that'd be great. All right? Now what you have to do in your date book, and once again, this is why you need to keep a date book. In your date book, you're going to put down there, lunch with Sherry at Applebee's, $15. Now, you don't have to pay for that other person's meal to deduct yours. Okay, you can just pay for your meal and you can deduct that. And you say lunch with Sherry at Applebee's, $15. And this is very important now. You put down there, ask for referral. And that's your documentation to the IRS that you have the who, what, when, where, why, how. Okay? Those are the things that you want to cover with the IRS so that they can see a pattern that, yes, you go out to eat and you put the information in your date book. Okay? And guess what the greatest thing of all about this is? Okay? You do not need a receipt for that. Now that's the strict IRS rule. You do not need a receipt for that. Okay? Unless it's over $75. Now I tell people, if they want to keep a receipt, that's cool, you can keep it. Okay? But the IRS does not require you to give a receipt for that if you have it documented in your date book. So this is for the advanced people. Once you get in a habit of putting this in your date book, then you can start tossing your receipts. Okay? You don't need to keep all these receipts. You need to keep documentation in your date book. Now just think to yourself, over the past 30 or 60 days, how many times you had a coffee with somebody or how many times you had a meal with somebody, and how many missed opportunities that you had to ask for a referral. All right? So it's amazing. People say, well, it's only a $5 coffee. If you knew how much money I spend at Starbucks every year, or how many coffees I have in Australia, it costs $5 for a coffee. All right? So I go out for a coffee with 3 people, and I decide to pay for it. It's costing me $15. Okay? So, and then even in America, I've already spent $40 at Starbucks, and I haven't even been here 2 weeks because I'm meeting with people. Okay? So, is everybody on track? Just say yes. Okay, awesome. Okay, is this good information? Yes or no? Okay, awesome. All right. Now what we want to talk about, and I'm going to keep this to an hour, okay, just so you know, we got an hour here, because I could talk all night and all day on this. But let's talk about traveling. Now, so far we talked about your car, we talked about your meals, and we showed you that yes, if you want those tax deductions, you have to do certain business activity that will promote your business. The sign on your car will promote your business. You're driving places and promoting your business on bulletin boards and handing out flyers and delivering products. That's all going to promote your business. Same way with the meals. Every time you have coffee, you want to hand out these cards. You know, your only job, and I weave this in here, your only job as a business person really is to plant seeds. Okay, we can only plant seeds for business, and some of those seeds will grow, and some of those seeds will not grow. All right, but if we don't plant any seeds, no seeds will grow. Okay, I'm still reaping a harvest from seeds I planted over 15 years ago. All right, now I'm not saying that to impress you, I'm saying that to impress upon you that if you want to go about having a big business, go about planting seeds. Okay, so let's talk about the fun thing is travel. And you know, I like to cruise. I like to go on cruises, and I always use this example. When you travel, okay, the IRS says that while you're on travel, and travel, just to back up, travel is if you're away from home overnight, or away from home where you need sleep. When you're away from home long enough that you require sleep, then you are officially on travel. All right? That's important to note because some people think traveling is driving half hour down the road to a seminar. Okay, that's not on travel. That's not what we're talking about right now. When you go traveling, say that you want to write, you know, you hear people all the time, how to write off your vacation. Well, I'm going to tell you how to write off your vacation. What you want to do, if you go on a cruise, let's just take that for example, you go on a cruise. The IRS says while on travel, if you work 4 hours and 1 minute out of any day, you can declare that as a business day. And as a business day, you get to deduct off all your accommodation, you're traveling to get there. If you're traveling by plane or by boat, car, or whatever, you can deduct all those things on that day. Now, if I'm going on a 5-day cruise that cost me $2,000, all right, I want to work 4 hours and 1 minute out of every day. Now, you might be saying to yourself right now, Steve, I'm on vacation, all right? I'm not going to work 4 hours and 1 minute. But you have to back up from that and say, what is your work? Your work as a direct salesperson is to plant seeds, all right? The way you plant seeds is to have meaningful conversations with people that can lead to either a prospect or sale or people coming to your parties, okay? Now that doesn't mean that you get on the boat on your cruise and throw up on everybody about your business, okay? That just means that you have meaningful conversation with people, and you can do that 4 hours and 1 minute because you're always talking to people on a cruise, and you say to yourself, well, how do I do that? The first thing that you want to do when you approach somebody when you're on your cruise is say hello, you know? And what most people talk about is they talk about family, occupation, recreation, and their message. So when you meet somebody on a cruise, you say, hey, you know, did you bring your family? Blah, 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 blah. What do you do for a living? You know, what do you like to do when you're not working? You know, you weave these things in your conversations, and you can say, you know, for sure, when I go on a cruise, you don't want to necessarily say, hey, I do party plans with Pampered Chef and we get together and blah, 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 blah. And that depends on who you're talking to. They might not want to hear that. You can just say, I help people build secondary incomes by having fun. Now I'm sure you're not interested in that, but that's okay. Now and then you just let it lie. These are I've tested all these things. I've gone on about 7 cruises and it works all the time. You just let that lay, and then some people will just walk away. Some people will say, well, how do you do that? Then you can go, well, like we set up a system of party plans where we invite people and we teach people how to make a secondary income and just stop. Okay? They say, and you can ask them, what do you do for a living? They say, well, we want to talk about you. So you have these conversations, okay? And you do this 4 hours and 1 minute out of every day, and it's easy. Now let's just say that you only do that 2 out of 5 days. You can write off 40% of your cruise because you have 2 business days. 2 divided by 5 is 40%. Now, 40% of $2,000 is an $800 deduction, which for most people is going to come down to about $160 savings on your taxes. Now you say, well, Steve, that's not much. That's only $160. But if I got everybody's PayPal address on this call tonight and said, I want to send you $160, would there be anybody on this phone call that would turn it down? Exactly. Okay? Exactly. And I sat with clients today in Starbucks and I talked to them about how I have built a back end on the internet where I have money coming in from about 400 sources. Okay? And some of those sources only bring me about $30 a month. But who cares? I have 400 sources where I can bring in money. Okay? A little bit at a time. And that's really what that's how you build true wealth, is to have little bits of money coming in all the time from a lot of different sources. Okay? So right there, if you really want to go to town, all right, you can make all 5 of those days business days and you can write off your whole cruise. Okay? But you better have it documented that every day that you write a little journal, I did this, and gather some information on some people. Say, well, look, if you're really serious and not curious, I can give you a call when we get off the cruise and we can have a telephone conversation about this and get their name and number and write that down. Okay? Because I was involved not personally, but one of my clients was involved in an audit where they had to show that, yeah, this is where I get my clients from, and this is what I do, and this is why I can write off all these things. And guess what? It passed. Okay? Same way is that I had a client that we talked about the vehicle, that passed the IRS too. Okay? So all these things, I know that they work. Okay? And that's how you can write off your travel. Now I'm going to talk to you about something that a lot of accountants and CPAs do not want to talk about. They don't want to talk about this issue of buying things from Pampered Chef, okay, or buying things or automatic shipments. People in certain direct sales companies. I'll just use Mary Kay as an example. Mary Kay, they have to purchase so much per month in order to stay active, okay, in order to get their commissions. That is 100% write-off, okay? And that means no matter if they use it or their kids use it or they dump it down the toilet, they have to buy that amount to stay active, and therefore they can write 100% of that off. And this is my opinion, and this is as a business person, okay, you're in Pampered Chef, and if you don't know how these products work, how can you get up in front of somebody and do a show and say, oh yeah, you can use these baking dishes and they come out clean and there's no problem with these baking dishes, and someone's going to raise their hand and say, what was the last thing you baked in those baking dishes that you have? And you'll say, I don't, I baked some lasagna. Yeah, it came out right. No, you have to know that your products, you have to know that they work. Okay? And that, therefore, I'm telling you true that everything that you buy that's in your household that says Pampered Chef on it, you deduct 100% of that. Okay? Now, there's going to be accountants and CPAs out there that differ with me and say, oh, no, that's personal use, Steve. They can't deduct that. There's nothing personal in business. You're an integral part of your business, and especially something like that. If I go to a show, okay, Pampered Chef show, I want to know that you use the products. Okay? I mean, would you buy, would you, and this is why that I'm involved in direct sales personally, because a lot of people say, well, Steve, how many direct sales companies were you involved with? And if I say, no, I don't do direct sales, they're going to say, well, how do you know about it? How, is it something you just read out of a textbook? No, I actually did it, and I'm actually doing it right now. I'm involved in 2 direct sales companies, okay, and I know exactly what goes on. So same way with Pampered Chef, I want to know that you know that the spatulas are good. I want to know that you know that all your products taste good and work well in the kitchen. Okay, can I get an amen from somebody on the phone call? Okay, thank you. So, when you go into your accountant, if you go to someone else, and say, here, look, I bought all these things for my kitchen because I need to know that this stoneware works or whatever, and they say, oh, no, you can't write that off personal. No. No. That's for my business, okay? I have to write that off. That's for my business, okay? Now, the same way, when you earn incentives from the company, all right, what happens is you earn products as incentives, okay, because you hit a certain milestone or you did something good. They give you some products. Say they give you $300 worth of products as incentives. Now, at the end of the year, the company gives you a 1099 for those products, and you have to declare that as income. All right? Now, what happens is you use those products in your business, okay? So what I say is you declare them as income on your 1099 because they give you that. Then you write them off right away as a promotion, okay? Because you're using them in business, so you don't pay any tax on those products that you earned as an incentive, okay? And a lot of Pampered Chef, I've done a lot of amended returns where people have earned, up to $1,000 worth of products, and they ended up paying tax on them. That's a couple $100 in their pocket that they're missing out on. So with all these different things, I've shown you, how to save money on your mileage. Most people, when they get this mileage thing down, they can save about, another $300 to $500 a year just on their miles. They can save another, say $200 a year on their meals. And maybe let's just say real conservative, they'll go on a vacation and they'll save $200. And then on their everything that they buy from Pampered Chef, they might save another $200. So I've given tonight, just in those things, where you can get another $1,000 in your pocket just from your business. Okay? And once you get your business plan written and implement it, and you get your date book rolling, where you look at your date book and you know what, you say, man, that's an empty day there. I got to do something for Pampered Chef. Well, that's an empty day there. I got to go do some driving around and gathering some business cards. I got to do this. You fill up your date book, you're going to fill up your checkbook. Okay? Now, we've gone 50 minutes, and I'm just going to take, if anybody has a questions, I'll take questions for about 5 minutes, and then I just want to tell you what I have to offer you, and then we'll go from there. Is that cool?